Now that tariffs on Mexican imports have been averted, at least for now, attention turns back to China. And a new report out today from that country showed a decline in Chinese imports, perhaps an indication that the trade war is reducing demand there. And the icy relationship between the U.S. and China was punctuated over the weekend when Treasury Secretary Mnuchin defended the use of tariffs and said that there could be more coming. Eunice Yoon is in Beijing for us tonight.
Chinese export data for May beat expectations. It appears that manufacturers front-loaded shipments or rushed orders after President Trump threatened to slap more tariffs on $300 billion worth of goods. Exports jumped 1%, blowing past consensus of a fall of 3.8%. Imports suggested lackluster domestic demand. The trade surplus with the U.S. widened to a 4-month high to $27 billion. Most analysts believe weak global growth in the trade war will hurt the chances of a recovery in the second half and lead to more stimulus. Separately, China responded to Mnuchin's assertion that Presidents Trump and Xi would meet at the G20 in June. The foreign ministry refused to confirm the meeting, saying, "We have noticed the United States has repeatedly expressed its expectation. If there is concrete news on this, China will release it in a timely manner." China is likely assessing the risks of having President Xi Jinping meet with President Trump. The Chinese won't want President Xi to be publicly humiliated. At the same time, they'll want to appear like the consistent partner in the U.S.-China relationship, which suggests that they would want to have the meeting. The bottom line, though, is that from the Chinese perspective, a Trump-Xi meeting at the G20 is not a done deal. For Nightly Business Report, I'm Eunice Yoon in Beijing.